Morning, everybody. I actually didn't realize that it's been on for an hour. I actually just realized that, and now I see that we've been on for a while. I guess I must have been streaming a lot earlier. So hope everybody's having a great day. Welcome to our Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys are having a great day. I'm back to streaming the way we were used to, and I guess I didn't realize that I had already turned on the stream. So I'll have to go back in and edit that video later today. So, all right, guys. I appreciate that, Walter. Thanks, man. We're about ready to get rolling today. For those of you that don't know, we look at the same futures markets every day, 10 to 12 futures markets from an educational perspective, looking for potential breakouts and reversal trades. Mesnock enjoyed the artwork. Well, I'm glad you enjoyed the artwork. My kids work very hard on it. That's their thing. So let's go ahead and shut my face down so that you guys can see the actual charts, and we're going to go ahead and get rolling this morning. We're actually up a little bit today, doing all right this morning overall in the S&P, as we are up about 9 points. So we're sitting up about 9 points in the ES. And in those 9 points that we've had the rally up in the ES, that included a big 2 a.m. move. Now, the 2 a.m. move is important because that 2 a.m. move, shut up your face. I hear that one regularly. No. I really like this setup, right? This is the time of day that we find really good opportunities. This is the overnight London Open time of the day where we get to see good movements come out of this zone. And so I'm going to wrap my lines around there. Mike seems a bit low. I will turn it up for you. Should be better now. I turned it down last night because they said it was a bit hot last night. So, all right. The level here, 3687 by 3684, I think would be the zone that we would be looking at here. And so what I'm going to do with this one, if I activate this and move it down just a smidge. There we go. That area would be the one that I think is going to be the most valuable lever. 3687, 3683, somewhere in there on a reversal. Price comes back into here. Stop at the tightest would be under here at 3682. Realistically, it's a better stop at 3680. And overall on our 4 hour, then we are chopping, technically, we're still heading back up with higher swing highs and higher swing lows, but it's not a big direction one way or the other, as we can see that we've got below this all-time high. Now, we're below the all-time high in this market, but if I take a look at the Russell, what we talked about yesterday was the fact that we believed that the Russell was the better market. Okay, and I know yesterday's DMC was not optimal conditions as far as our production value, but we did talk about the fact that our two markets that made the most sense yesterday were the Russell and the NASDAQ. And the Russell definitely did come up out of that. And from that level that we came out of, we got a really nice run, and that has continued. And the NASDAQ reversed off of our small time frame level that we had identified in the session. This was actually a really good touch and go. This was the trade of the day. Nicked it to the tick and then got a very strong move away. So hopefully some of you were able to capture some of those moves in there. But now what I'm looking at in all three of these markets, the S&P, the NASDAQ, and the Russell, is that we do have that continued bullish movement. And if I look at the 4 hour chart of the NASDAQ, we're coming close to eclipsing the all-time high of 12,675. We're not quite there yet. We are actually now a bit below the London Open area. So the fact that we've gotten a bit below that area makes it a little bit less comfortable for the S&P. Because here's that same level we just looked at in the S&P. We're just about below that in the NASDAQ. So it makes it a little bit weaker. So that level in the S&P, that makes me a little bit more cautious in there. A little bit more cautious on that level, but I'm still going to consider it. I'll just switch it to a confirmation since we blew through it on the NASDAQ. Okay, hold on one second here. My room's a little on the cool side this morning. There we go. All right. So S&P, NASDAQ, if I look at a pullback in the NASDAQ, your better level on the NASDAQ pullback, I mean, I'm not using the 2 a.m. because we're already there. If I go a bit lower to this pivot right here, it's just not a great time of the day. And I think you're probably better off looking right about here. 12,539 by 12,530, that little wick over wick above the pivot. Now, this area here, still valid. I just have to switch to a confirmation entry since we just did a touch and go. We didn't trade halfway into the level. We did get a good move away from that level, and so that one was a pretty good little runner. In the Russell, similar thing that we have that 2 a.m. reversal that price is not yet back and retested. Now, when I say 2 a.m., by the way, I'm talking my time zone, so it's Central Standard Time here in the U.S. Obviously, you've got to adjust for your own time zone, but the key here is that we are trading right around the London Open, right? That's what I care most about. Is this 1 a.m., 2 a.m. time of the day is when we're, midnight, 1 a.m., 2 a.m. That's the London and the German market opens. Those are typically going to be decent reversal times of the day. We talk a lot about what time of the day was a level created, and that really, really matters. Because that same level that's created at 7 p.m. doesn't have the same validity to me in my market. And then in the YM, the Dow Jones, we are in between 29,604, 3297, and we're in that range. So I'm not going to really add anything to the Dow. I think my other markets are better probabilities than the Dow is today, and ultimately I think those are going to be the best ones, and the ones that we're going to find the opportunity to lean on. So, questions on the equity markets. Questions on the equity markets as I pull up our trade update so I can load these in. All right, if nobody has any questions, we're going to move on. Let me share this grid. All right. Next, let's go take a look at our commodity markets. Nathaniel, iron condor on the Dow. Sorry, I just saw that one. We could do an iron condor on the Dow. I mean, you're looking at the if we do it on the DJ on the actual index itself. Oops. Let's see. Ooh, you got these ones that expire here right away in the next couple of days. That's a one-day expiration. So, it's not a great opportunity on that one. Let me look at the actual YM and see what we've got. The actual YM futures might be better. Yeah, we did not have. I agree, Larry. We did not have basing on the YM on the Russell breakout. I think that the Russell breakout was much better served if you had gotten the breakout. We unfortunately didn't get the breakout. We got the movement right, but the breakout just didn't set up for us. So I think the retest is still very much in play if we come back to that area. So, all right, let me slide down here. What the heck am I doing? All right. So if I look at these areas here in the YM, and we're looking at an iron condor, you'd want it to be between 30,300 and probably 29.8. So between 30,300 and 29.8. Oops. Oh, it's not giving me the tradable. I'm not sure on this one. I've never really traded Dow Jones futures at all. Lee, I'm not sure. It might be your phone. I feel like the feed's working just fine. I haven't heard from anybody else. Yeah, I'm not really able to pull much out of this, but for some reason it's not giving me a tradable on this one. I've never traded the Dow Jones futures, so I can't really look into it, Nathaniel. But the other side is that I don't know that I would want to do an iron condor because it's still going to follow the rest of the market, right? So it's still going to follow the rest of the market, and that's the reason that I don't know that I would look at it. So, all right. Yeah, I switched my live stream feed back to what I was using because it was a hot mess the last 2 days. I tried an experiment, and it failed absolutely miserably. So, all right, energies and metals. It's what you get for, so it's like Homer Simpson said, you tried your best and you failed. You know the moral? Never try. Looking at crude oil, we talked about crude yesterday as a potential breakout trade. We hit it, moved away, hit it again, where we're unable to break through it yesterday. We did pop through it here in the overnight, but it's not really gone anywhere. I still think that overall our better chances are for price to rally up. But I would need to say that, okay, if you decide you want to try this on a long, and that's really what the price action is telling us, it has the better probability of doing if I just take a look at this from a price action standpoint. Where would my stop go? Well, the absolute tightest your stop could be, if you want to try to get long above this blue line and you're not in it yet, you can go candle to candle long. And I say candle to candle because of this candlestick right here on an hourly chart. That's a decent doji reversal at a potential breakout point. So if you wanted to go long on that, that's minimal exposure, minimal risk, and a good way to scale into this, right? If you like the position but you don't love it, what you could do is scale into it, meaning maybe you ultimately want to go long at, I don't know, 3 contracts. We'll get into 1 contract now with your stop below here. When we get above maybe this area, put your second contract on and put your stop underneath and move your stop up underneath the first candle. And then as we move up above this 47.91, add your third contract, move your stop to break even. And so now you have moved up your stop and you've scaled into the position. And so I'm okay with scaling into positions as long as you don't make the scaling too far apart, as long as that scaling is done close and you're utilizing something like that. In gold, we had talked about the breakout area here in gold, so we did get a little bit of a setup. You know, we talked yesterday about the fact that this is certainly no basing here, but we had basing in front, so that still existed. But we did get a little bit of move right here yesterday morning. Now we poked above, came back down below, and then rallied off. This looks a little bit like what oil is doing right now, doesn't it? If we look about what oil is right now, this is that reversal candle that pulled back below the breakout line, and then price continued to run. So if you took that, I think it's okay. I would move your stop up at this point underneath here. So, Jersey Trader, I have not set that video up yet. That's actually on my list to build, but we have not built that video as of yet. That is something that we can work on. I've been in the weeds and frankly haven't gotten it done yet. So. Now, next area that I would look for would be this 1836 level, 1835, 1836 on a pullback. I think that's not a great time of the day, but it's a pretty decent wick over wick above a pivot high. And so because it's a poor time of the day, I'll make it a confirmation entry. Supply level up here is actually pretty clean, this 1874. And our 4-hour chart is, you know, we never did finish up this head and shoulders pattern as it just kind of popped away from that level. So that head and shoulders pattern kind of fell apart, but it didn't fall apart by, you know, with a loss because it didn't get us in the trade, right? With no basing, there was no reason to enter the position. So I'm okay with that, as I was expecting really this head and shoulders pattern to hold true and for us to come down into this range. But we've been able to come up a bit higher. Overall on our 4-hour, we are a bit sideways. I mean, maybe still a bit range bound. So this 1-hour chart up here, if you're more aggressive and you want to try an intraday trade, you can give this shot an entry. If we get basing anywhere inside of this range, then that's going to take that trade off the table. Okay, so I need to get the basing that's going to work, and that basing has to happen outside of this range. If I get any basing inside this range, that reversal trade comes off the table and actually probably sets up for a decent breakout. Nat gas, we are still below our level in Nat gas. We talked yesterday about the fact that there wasn't a whole lot of setups in this, and so we're still below our level in natural gas, and really nothing to add, right? There's, you know, from where we opened Sunday to where we are today, the market has been full of sound and fury signifying nothing. There's been almost no movement, and so with limited movement and not a lot happening, there's just nothing here for me to worry about. And then copper, we talked about copper yesterday. We got one hit 2 hits, 3 hits, 4 hits. We didn't really get basing immediately before the level, and so we did break out overnight, but without the immediate basing before the level. Technically, you could have taken it with the close enough in here, but in reality, it's not immediate basing, and frankly, I'm not awake to take it. Maybe John and Nick and Jose and some of you, the guys that are trading from the other side of the pond, you were up to take a look at it. I don't know if this was one that you normally trade or not. And if you did, it did give you a little bit of basing there, maybe to give you a setup. And it's run somewhat since there, but it also came back and retested the level, right? So now what I would say is that if we do come back, I would say that your better opportunity is the retest into this region here if price comes back into that zone. All right, let me share this one. All right, let's go take a look next at our ags. And yesterday, from the ags to the currencies, we didn't have a whole lot to go off of. There really wasn't a whole lot happening for us to talk about. So starting with soy, we did have a supply level in here. Price came into the supply level with a good bit of speed. We came in with a good bit of speed. We hit the level. And then what happened? Well, 1, 2, 3, 4, 5, 6 candles later, where were we? Nowhere. So what's our rule after 6 candles? If we hit a level and after 6 candles, we've not moved anywhere, get the heck out of Dodge. Now, the trade didn't give you an entry until the afternoon. And so, it got there in the last hour of pit trading, and it opened up higher in the first hour of Globex trading and then traded down. So this trade for you is, let's just get out of this position. It hasn't gone anywhere, and you got to follow the rules. I wouldn't be opposed to you not getting into this thing at all, since it entered the position at the very, very end of pit trading, right? And I'm not sure what most of you guys think about that. Now, I am going to delete this level, and I'm going to add a new one, which is this one right here. Now, why do I add this one? This one because I have a rally-based rally. It didn't occur at the greatest time of day, but not terrible either. But the thing I also like about it is that it's a prior area of resistance, right? Old resistance oftentimes acts as new support. And I think that we may see that resistance line that existed in the past be a little bit of a line of control when it comes to price. And if this area here becomes a bit of a line of control, we may see that this acts as a magnet for price going forward. I would like to see, hold on, let me throw something on here real quick. So I got the 20-day chart. I'm going to throw my volume profile on there. So it's not the peak volume over the past 20 days. Let me look over the last 5 days. Yeah, so our peak volume there is that 1164. Oops, not on the daily. By 1169, and then let me just look at this a slightly different way. Interesting. So it is the peak of volume from yesterday's price action right in this region here. So this is a volume node that we will sometimes see as a peak. So I don't cover this very often in the daily market commentary, but it is something for us to take a look at, that we had so much trading at this level and it wraps around the zone. This was our peak of volume during yesterday's trading, and so this might be this is why these oftentimes will act as a magnet for price. So this is for those of you guys that you look for where the higher probability levels. We're combining it with what's called volume profiles. So that actually may be a decent turning point if price returns back to there today. Sonia, I'm not real sure. I've not heard from anybody else. It seems according to all of my data says that the stream is strong. So 25,000 share bars look good too. Thanks, John. That helps as well. So I think that's actually a pretty good setup. I mean, that's a lot of indications that that's a pretty strong level. Nathaniel, that indicator is it's called volume profile inside of Thinkorswim. So I adjusted the settings significantly to get it to this setup, but this is looking at the volume profile of each day. So it's a volume profile split up by each and every day, showing me where the nodes of volume strength are. Once again, never a decision-making tool. It's simply as we use the word, tactical reinforcement. So, well, and I will tell you, I think a lot of you guys are having internet issues. The entire country is having internet issues. I don't know if anybody else has noticed that. The whole U.S., at least in the U.S., we're having internet issues in pockets. AT&T announced a couple of days ago that they had a mass outage, and there was outages all over the country in pockets. And so I think that could be part of what's doing it. I think everybody's just staying home streaming, and so our bandwidth is stretched. Corn sitting at a potential breakout area here, where I think there's room to run if we can pop above that region there. Wheat has come into the area of supply. Our opposing zone would be right here, so it's just about gotten to that level. 1, 2, 3, 4, 5. We're 6 candles in. So if you took the wheat trade here off these hourly level, now's the time to take your stop and move it to break even. Reason being is that we've gone basically nowhere from entry, and so take the loss off. Get rid of the opportunity for a potential loss. If I look at the next area above me for supply, it's actually this one right here, which is very clean. Yeah, it's just, I think really it's just that everybody's on at one time. And I think that with the nor'easter and more people going to be home, it's going to be even worse. That nor'easter that's hitting New York, Boston, Philly, that whole area. I mean, you got to remember, that's what, 15% of the U.S. population is going to get affected by this snowstorm, 20%. So, and now if they're not leaving their houses and they're staying home, which they're already doing, but now it's really going to be staying home. All right, so those are the levels that I think make the most sense in commodities today. I really like that soybean level just due to the confluence of a couple of other indicators in there. Ags, I think, are better more of the swing trading perspective. I think that your swing trading perspective is probably the better one, but you know, it certainly does work for day trading opportunities as well. All right, let me move over to currencies. So yesterday we had nothing in currencies to look at. I mean, it was just one of those days where we got smacked around the day before, and I decided I was really not going to add a currency trade to my list, and I didn't. There was nothing that I added up to the list. We didn't have really anything in the bonds, as the bonds popped down in the overnight. Actually, just in the last hour, we've popped down pretty hard in the bonds. Decent supply level up here that if we retest, I think we may get a little move into that zone. Next is we talked about the 30-year yesterday. We hit the level, and then it kind of hit it and stalled, right? Well, what is that typically a setup for? When you hit it and then you stall in front, and then you hit it again and you chop sideways, I mean, that is a picture-perfect breakout setup. That's usually what we look for a breakdown. So if I go a bit smaller, if we come back up into this region, look for a potential retest right here. 172.25, 172.28. So super small. Now the euro, we talked about the fact that I think there was a better chance the price was going to break out, and we did get the breakout here recently. Yesterday we popped above that level. We had a breakdown in effect here, but it was really just very, very tight trading, right? Very tight trading, and this is really hard to trade in. So if you didn't take it, good. Probably not a bad idea, because now we've kind of pulled back into it. This is a speed candle. Speed candles do tend to get retraced, and since we know that speed candles do tend to get retraced, our 4-hour trend continues to be up. So our 15-minute, I'll look and see, is there an entry on the 15-minute that's closer than the pivot? Not really. I mean, you're probably best taking this whole area here on a retest if we come back to retesting that whole area. We don't always retest the whole thing, and we could start to reverse at about here. Well, why would we reverse here? What's significant about this area? Well, so the significance of this area is that it's an old area of resistance. Old resistance oftentimes acts as new support. That's number one. Number two, the other significance is that it's 50% of the 50% of the move up. And so a 50% retracement combined with an old resistance becomes new support means that if enough people decide that that's a place to buy, then it becomes a self-fulfilling prophecy, and boom, we get a reversal. So you could look for a candle-to-candle long right here if you are a bit more aggressive. Now remember, a candle-to-candle long needs to be coupled with some sort of candlestick reversal pattern. A hammer candle is ideal. A doji is even okay. A spinning top reversal pattern. Those are the kind of things that we would have to look for in there. Canadian dollar, same thing we talked yesterday. We didn't quite get quality basing. If you took the breakout anyway, 6 candles later, it told you to get the hell out of there. And it's really not done a whole lot. And I don't want to add anything to the list as it's just going sideways. So nothing more on there. Scott asking for room to run. So I think on this, I assume you're talking on the euro, Scott, because of the delay. I think there is room to run on here because our 4-hour is still so strong to the upside. And I think you've got room to run to the next area of supply up in here. I think especially if you go candle to candle, that'll give you a greater than a 2-to-1 reward to risk. And I think it's okay. I would get out. I don't know if I would get out completely just before this area of supply, but I would definitely protect some profits just before that area of supply. Now, one way, by the way, let's say you go long, and look, let's say you go long this futures contract, and you start to come close to this supply area, right? So check this out. You go long this euro, and you start to come close to this supply area. You only get in one contract. So you only get in one contract. You don't want to get out of the trade. You want to let it run, but you have come close to a supply area. How do you allow the trade to keep running while still protecting yourself from price coming screaming back down? What can you do? This is a quiz for those of you out there that don't do this. What do you do? If you've got an area of demand where you're buying and you go long the futures contract, price rallies up to your target, but you think it can run through the target. I want to take some money off the table, but I also only have one contract. Well, moving my stop, that I could certainly move my stop up. That's an idea that would lock in some profit. Could put in a trailing stop. Liz says buy an FXE put. That's actually what I like much better. See, this is how you use options, right? Pray it keeps going up. This is the best way to use options. Options are truly insurance policies. A put option is an insurance policy against a long position. So if I were to buy a put option somewhere up in that region, what that would do is that would protect me on the pullback, because the put option would gain in value. Now, is it going to gain in value as much as the other position loses in value? No. But it can protect me for a temporary pullback where I could actually then close that put option off at a profit and allow my other position to stay in there, right? That's a way that you can do it. That's a hedging strategy that allows you to use some of the profits that you've made from the position. So actually, I think what works best is move your stop to break even and pick up the put position, right? By moving my stop to break even and then I pick up the put position, that allows me to protect myself on a big move down because that put's going to gain in value if that thing falls apart on me, and I still wind up with some sort of a profit in that position. Or if I'm wrong and it starts to go up, I have a stop loss on the put that's fairly tight, allowing me to resume my upward trend. Does that make sense? You're basically mixing options with your asset class of choice. Now you can use the FXE, which is the ETF of the euro, or you can just use euro options themselves. So that's a way to do it. I do like John's idea about selling micros. You could also, let's say you're long a standard lot, right? You're long not standard lot. You're long one standard contract, one E-mini. What if I went short 5 micros up there, right? Well, then I lose half my delta, but I also protect half my delta on the other side. So there are ways to utilize other assets as hedges against your main position to allow your position to continue to run, right? Those are institutional tactics and strategies around letting profits go for longer periods of time. And we don't normally do that for day trading, for swing trading, but it's done all the time for longer term stuff, all the time for longer term stuff. So kind of consider that. All right, I'm going to share this grid. And I know that's a little bit of an abstract topic for us to talk about at 7 o'clock in the morning. Dennis, let's pull it up here real quick. So if I pull up the micros on 6E, and we look at the active trader, because this is really, here's the best way to tell liquidity, is to pull up your active trader and to look at the difference in your bid and your ask. If my bid and my ask is 1 tick, 2 ticks apart, I don't have to worry about liquidity. The number of contracts I have here isn't really all that important. What's more important is what's the spread between the bid and the offer, right? So the liquidity is okay when I look at something like this. That's how I always gauge liquidity. All right, last two markets. So let's take a look at our New Zealand dollar, Great British pound, Japanese yen, and the Aussie. Yesterday, I did not add anything to these. Yeah, the others are not as good, John. But that's how you check them, right? You just check your active trader, and if it's too wide, then you don't take it. All right, the New Zealand dollar yesterday, when we had looked at it, we had taken our lines off the chart. We do have a demand area here that we're coming close to. I'm not a huge fan of this time of day. However, this is the opening market for the New Zealand dollar, right? Right there's around the opening time of day for the New Zealand dollar. And so that actually might be a better level based upon that. Now, a 4-hour chart tells me that I'm still in an uptrend, but what do we see is happening with my momentum? I don't need to be a genius to see that my momentum is weakening. I'm seeing higher swing highs here, lower swing highs here. So my momentum is definitely weakening. Let me throw this on here real quick just to see. I've not dropped below the 40 on my RSI though on the pullback. So we could still be, able to continue the run on the 4-hour. Even on the 1-hour, we've not dropped below it. So I think that area could still be pretty valid. Let's keep that area in mind for today. Great British pound. Kapawi, we've ran up pretty hard over the last day or so. So where would we look for a pullback? Well, 4-hour chart's giving me actually a pretty strong reversal. Taking a look down here, 347. TradeStation won't let you enter a stop. That is weird. TradeStation does some weird things I've noticed, and I'm not knocking them, right? They've got their risk management rules and their things set in place, and I just some interesting things that it does. All right, Japanese yen, we're sitting at just below our breakout point, and we're basing in front of the level. So keep an eye on that one for potential breakout. If we do get a retest, look to down here, I think is your best area. 4 hours, we're sitting above here. This is really only our second test of the level. So even if we break out now, it doesn't fit our rules, right? I need 3 touches for a breakout. I don't have my 3rd touch. Australian dollar, so looking at the Aussie. On the Aussie position. By the way, somebody makes fun of me. I got made fun of because of the way that I say Aussie. Because I say the Aussie dollar, not the Aussie. A lot of people say the Aussie. The reason I do that is I was actually teaching a class in Sydney one day, and I said, we're looking at along here on the Aussie, and there was 100 people in the class, and he literally stopped the class. He goes, excuse me, do you mind saying Aussie? Because that's the right way. I went, okay, no problem. So that's why people can make fun of me all you want, but it's only because I was publicly chastised that I say the Aussie. All right. So in this area, 75.45 by 75.37, I think we have a decent potential for a reversal. Well, Tom, that's not my fault. The way that I say wheat really comes from Stewie Griffin and, wheaten and all of those things. All right, so let me share this grid. It's like I like Cool Whip with my pie. All right. So all of our grids are shared in the trade feed. If you guys have any questions at all, please feel free to send me an email, chuck.fulkerson@tradersarmy.com. Tonight, we have our Wealth Essentials session. So for those of you that are Traders Army members, feel free to join us for the Wealth Essentials class. We did our first ever class last night of tactical reinforcements. We did session 1. Tomorrow night is going to be session 2. Corey and I are going to be doing that one tomorrow. So those of you guys that are joining us, great. If you watch the recordings, I hope you guys like it. Make sure that you give me your feedback. Tomorrow, no DMC. Tomorrow's going to be our live trade room starting at 7 a.m. So I will see you tomorrow morning. Until then, everybody, peace out. I appreciate you. Have a great day.